Let's get to some of the companies making news today. Barrick Mining beat fourth quarter estimates, and it's moving forward with an initial public offering, or at least preparations for that, for its big North American gold assets. Barrick, though, would maintain a large ownership share. We're joined by Garnet Anderson, Head of Wealth Management at Tacita Capital. Great to see you.
Good morning.
So they're pretty well confirming that an IPO is the plan here.
Yeah, laying down the track to go and do it, kind of create a pure play North American mines. They're a global gold mining company. So by taking the North American, put it into one vehicle, they'll be more of a pure play. You know, there's chatter about whether does it make it an acquisition target, and because when you take a look at the mines outside of North America, there's more political instability. They've had mines that have been taken over in Valley, then taken back. That's been going on for decades for all gold companies.
Yeah.
So, but when it was announced back in December, the stock market really just shrugged. It was still too new. And I think we still say today, there's too many facts to come. How are you going to divide up the balance sheets? How it's going to roll out? So I think the market will be very much in a wait and see. They talked about over the next couple of months, they'll bring more facts to the table. And I think people can react then. So I don't see that really as a great or potential trading dynamic today that people have to really focus on, but it is coming down the pipeline in all likelihood.
Because it is complicated, isn't it? They jointly own some stuff in Nevada with Newmont, but some they don't.
Right, and then you get right of first refusal and how it all goes through. So one way of saying is, I think it's almost a little bit of a positive that stock hasn't bumped up as a result, because if it gets delayed, which often happens, or it gets torpedoed, that might not be the thing that pulls the stock back down.
Do you think investors are going to be pressing gold companies broadly to pay decent dividends with the cash that they're piling up right now?
They're piling in. Well, I think what they're concerned is they want to make sure it's not going to silly acquisitions or vanity drilling projects. And I think Barrick's a case where that's not happening. They bought back shares with $1.5 billion, which is interesting. You know, in the old textbooks, companies would buy back their shares when they thought it was undervalued. Maybe a little bit that, but right now more companies are like, they just have cash and they have programs and they're buying back their shares.
Buying back their shares. Sorry, even though they soared.
Well, exactly, but $1.5 billion. But when you've got that much cash, how are you getting it back to your shareholders? They have evolved their dividend. They always had like kind of since 2022, they have a base dividend and then they have like a bonus dividend, if you want. That was dependent on prior on net cash, now become as a proportion of basically operating cash or a form of operating cash. So what they're trying to do is say, we're going to pay you back a little bit of a dividend, call that about 1.1%. And we're going to pay you back bonus dividends when the cash is rolling in. And I think that's smart. At the end of the day, though, I think if we woke up and gold prices were below the all-in sustaining cost and they need to conserve cash, they're going to cut the dividends. They are not dividend players. When you take a look at the stack of gold stocks in Canada, you know, the yields are about 0.5%, maybe 1.25% on average. That's not why you go to gold stocks.
I wonder if they should be, because they own gold mines, for goodness sake.
They do, but it takes, you know, the CapEx every year to step out their reserves and to build into their infrastructure. That's massive capital. And they sold 4 different mines this year, raised over $2 billion. They've got a big mine stateside that they're plowing money into, the 4 Mile project. Yeah. And so you kind of pull capital in one place, you put it where you've got, where you think a better opportunity set, longer term mines with lower cost of extraction.
Would you be a buyer of Barrick now?
We hold, it's not our largest gold position. Like today, I was talking with our crack trading team this morning, where's it sitting in pre-market, just to see what the reaction was. It was off about 1.8%, but take Kinross as a kindred soul, it was off about 3%. So part of that really is just the share of gold price coming back down.
Yeah.
So we are comfortable with where it is. We tend to take and say, look, it's a high volatility stock. Give or take, it swings about 40%. Like this 1 year volatility is 40%. By comparison, what does that mean? Enbridge would be about 15%. Banks are around 16, 17%. What that means is the price is going to swing. Buyers can be patient. If you hold a position, you certainly don't have a reason to sell today. If you're thinking, oh, I'm going to get into the gold stock trade now,
maybe.
You may be a little bit late to the to the
Yes.
festivities sort of thing, and you may want to wait for a little bit more of a pullback get through this. But they had good results. They impressed on the earnings per share. They met kind of metrics in terms of gold production. They've got their copper production that kind of boosted up, and you're getting that leverage that you should get in mining companies. Revenues go up 30, 40%, profits go up over 100%. Swings both ways. So yes, we are a holder. We're not actively adding to it right now, but if we did see a sell-off vis-a-vis its comparatives, we think it's a quality company. We would step in.
Bombardier's had a magnificent run since the start of 2025.
It's taken off like a plane.
But now the guy in the White House is talking about tariffs because he's not happy with the speed of Canadian approval for American jets.
Correct, exactly. And so we were watching this, we hold this in our portfolio, and we were watching this like kind of hour by hour to see what the effect was. And it did tail off, not to the point that we thought it was a great opportunity. It did not become a fire sale. It was really an excuse for people to exhale. The thing had been ripping higher. There was this news. Most people kind of went, it's going to get worked out. And so I think the views of the company, it's not Bombardier of 10 years ago. Their balance sheet's in better shape. I would say that it's better managed now. They're growing their service side, which is a little bit more dependable than plain sales. There's a dependency on plain sales. There's a backlog. But, capital intensive to retool. And then as well as the economy goes, plain sales will go up and down. So it's nice to see them balance this out. So it's a strong stock. It too has had its volatile moments. I mean, I'm going way back, but it's now it's over 200, right?
Maybe we could put up a 10-year chart, carry on.
Yeah, and let's take a look at what the price was in COVID for the brave buyers back then. But having said that, it has had a series of drawdowns. I think it was down around $7 back after COVID, right? So those that had the courage to step into that particular time and ride it out, which is always hard to do. You've doubled your money, you've quadrupled your money. You got your 10 bag, or do you pull out sort of thing. But it is good fundamentals, and then the little bit of the teaser is what's going to go on with their new defense area. And they seem to be gaining some traction there. I'm not sure what the net present value of that growth will be in today's stock price dollars, but certainly it's factored into a degree. But if they can go, they've got the manufacturing capability, they've got the skill set to go there. We've talked before about what's going to go on in Canada with airplane building and what's going to be in the servicing, and now they tend to service their own planes. And then stateside, they've got servicing centers down there. They sell a lot of their planes into the States. They've got some business going down there with the military. So can that grow? They're obviously optimistic. So I think that's the teaser on the outside.
Garnet, always great hearing from you.
Pleasure to be here. Thank you.
Garnet Anderson of Tacita Capital.